Now it's time to check up on the market action on this Thursday, and for that we have on the line Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for joining us today.
Thank you for having me.
So we just heard the Bank of Korea decided to keep interest rates steady, but it's lowered its forecast for GDP growth to just 2.5%. The interest rate decision was pretty much expected, but how did the local markets react today?
Yes, today's market has been quite severely down by more than 1.5% on the both markets of the Kospi and Kosdaq. As you said, the rate was capped at 1.75%. Last year, November was the time when they raised the rate from 1.5% to 1.75%. But now it seems that the BOK continue to remain at the current rate. Reason for that is because the U.S. Fed is no longer planning to raise interest rate from current range of 2.25 to 2.5%. And the Korean Central Bank will be likely to keep this rate probably for a while. Some are expecting that there must be some kind of rate cut in order to boost the economy. But that's not going to happen unless there is a rate cut coming from U.S. or China in the future. It seems that BOK will use the wait-and-see strategy since that there is a supplementary budget coming through of about 7 trillion won that can boost the economic growth rate. But nevertheless, they have lowered the economic growth rate to 2.5%, and that has resulted into negatively to the Korean equity market today.
Yeah, definitely some pressure taken off the BOK for now. But yesterday we got the GDP figures from China for the first quarter, better than expected there at 6.4%. Stocks on Wall Street pretty steady after that. What are the global markets doing today?
Right. In generally, global market is taking a breather. There have been quite strong market movement in the first quarter. And I think they were expecting somewhat of a stabilization of the Chinese economic growth rate. After strong economic numbers, most of the economies showed the equity market taking a breather. Chinese market as well, they were down slightly. The number that came through was GDP growth rate of 6.4% and also industrial production of 8.5% growth. Retail sales was up 8.7%. While the whole fixed asset investment rose 6.3%. It seems that these numbers are indicating that Chinese economic restructuring is continuing, and this should allow further equity market potential in the future. But for the time being, because of such a strong movement due to the liquidity injection, it seems that the global market in general, they're taking some breathers, and that might last for a little bit while.
Got it. Well, there's big news in the tech sector with Apple and Qualcomm deciding to bury the hatchet on their dispute over patent licensing. So that opens the door for Apple to use Qualcomm chips in its 5G phones. There had, of course, been hopes that it might turn to another company like Samsung.
Yes, as you said, Qualcomm and Apple decided to end the patent right legal dispute and sign 7 years contract between the both companies. Qualcomm batted all on its bidder dispute with Apple and won it. So now, after the fight was over, the stock price of Qualcomm is soaring close to 40%. Qualcomm will continue to charge Apple royalties for its patents, and also Apple will pay Qualcomm a substantial fee as a part of the agreement. Now, with this news, the 5G investment should accelerate in the future. Of course, the competition will accelerate as well. In this case, we think that Samsung should benefit rather than be negatively affected because there could be stronger demand for 5G phones as Samsung is the leading IT company with the 5G technologies. We think that this has a broader implication for the fourth industrial revolutions, including data centers as well as the cloud computing, and affecting through the 5G phones introductions. So we do continue to have positive views in regards to the IT sector in global segmentations.
So either way, opportunities for Korean manufacturers here as well.
Yes.
All right, Mr. Yu, thanks. That's where we'll have to leave it today. Thanks for your insights today.
Thank you very much.